Hi, you've tuned in to Jigsaw Tax's range of seminars on the recent deployment of stimulus packages. Today's seminar focuses on businesses who act as employers or engage employees. Just a quick note that this information is current as of today, the 7th of April 2020, and we will see some legislative changes coming through. General disclaimers apply. This information is general in nature and should not be applied to your specific circumstances without first consulting the advice of a tax professional. Businesses that retain employees have become a crucial foothold in the government response for the COVID-19 outbreak. Stimulus packages have been largely targeted towards these business structures, with the aim of retaining workers in working relationships for the duration of the COVID-19 outbreak. This increases the pressure on employers to be up to date and compliant with lodgements and legislative changes in an environment that is changing daily. You, as a business owner who employs employees, will become the source of distribution for welfare payments for your employees. So it is important that you know what you are legally obligated to do during this period and what you feasibly can do to keep your business running. And finally, assistance is available, but there are time limits, delays, and an influx of queries coming from your staff. So it's really important that you understand how your business fits into the economic response to COVID-19 and what assistance you have access to. So we're going to frame this in a business cycle. So does your business have the capacity to continue to operate? And if not, how do you address stimulus package benefits for employees and yourself, as well as how do we address these stimulus packages and their compliance obligations as they come up? For essential businesses and those who are still operating in the turndown or in the shutdown, it is important to know what help is out there. So for companies, trusts, partnerships and sole traders who employed workers from 1 March, you will be eligible for a number of subsidies and cash flow assistance. For those who may be in a position as an employee or a sole trader without staff, we direct you to our Individuals and Sole Traders seminar for further information. So where are we? In the business cycle at the moment, we are addressing facts for businesses that are facing revenue impacts from COVID-19. Let's begin with a big one. So the JobKeeper is set to be legislated on Wednesday, the 8th of April, but this is the information we know so far, and because it is so pertinent to those of you who are still operating or who have recently stood down staff, it needs to be covered just for clarity purposes. So the JobKeeper payment is set to be legislated this week, and we will see eligible businesses entitled to $1,500 per fortnight per employee before tax from the 30th of March 2020 for a maximum of 6 months. Payments from the ATO are not expected to commence until 1 May 2020, but employers are expected to offer the payment option to employees from 30 March 2020 to retain employment with the organisation. Eligibilities for entity with a turnover of less than $1 billion requires that you experience a reduction in turnover greater than 30% to a comparable period last financial year. And registration at this point is done through an expression of interest provided to the ATO via their website, with a subsequent online application to be provided to the ATO. So let's look at your eligibility in detail. To receive the payment, you must register an intention to apply with the ATO and self-assess that you have or expect to experience a turnover decline of greater than 30% to a comparable period 12 months ago. Now, this is for those businesses with a turnover of less than $1 billion. For those with greater than $1 billion, it's a 50% reduction in turnover. You'll need to provide information to the ATO on eligible employees who are set to receive this payment, and this includes the number of eligible employees engaged as at 1 March 2020 and those who are currently employed by the business, including those who have recently been stood down. So that 1 March 2020 is a strong cutoff date. We want to know who was on your payroll at that period because they will be eligible for this payment. So this information will be pre-populated by the ATO in their subsequent forms via the Single Touch Payroll. So if you have not yet enabled Single Touch Payroll or do not have a compliant software package, please get in touch with your tax agent for further assistance. In participating in this stimulus package, you will be required to remit a minimum of $1,500 per employee per fortnight before tax. This means that payment needs to go directly to the employee It cannot sit as a liability for payment. You cannot deduct funds from this other than PAYG withholding. This payment is genuinely to keep your employees paid during the period. And when we look at if your employee had received less than $1,500 per fortnight typically, you will still be required to remit the full $1,500. If in some situations your employee has received more than $1,500 per fortnight, the employer will be able to provide the top up to meet their regular salary. So in short, what we're looking at is the first $1,500 of wages per fortnight for your eligible employees will be covered by the JobKeeper payment. Now, the tax commissioner will have the discretion to grant the payments in instances where a business was not in operation 12 months ago. And in addition to this, they will have tolerances where employers in good faith estimate a greater than 30% reduction in turnover, but actually experience a smaller fall in revenue. So this means the tax commissioner has concessions and the ability to apply discretion in instances where your eligibility may not fit the current disclosed criteria. So let's look at what counts as an eligible employee, or rather whom. So currently employed by an eligible employer. So that again is a business that has seen a reduction of 30% turnover on a comparable period 12 months ago. Employees who were with the employer at 1 March 2020. This includes full-time, part-time, or long-term casuals, which is a casual employee who was employed on a regular basis for longer than 12 months as of 1 March 2020. These employees are at least 16 years of age, are an Australian citizen, the holder of a permanent visa, or a special category, so subclass 444 visa, and they are not in receipt of the JobKeeper payment from another employer. So employees are only entitled to one of these payments. If they have multiple employers, they can only get it from one. So let's have a look at employee payments in detail. You must have an employment relationship with the eligible employee as of 1 March 2020, and you must confirm that each eligible employee is currently engaged in order to receive the JobKeeper payments. So in practicality terms, this usually means that employee was on your payroll at 1 March 2020. And even if they have been stood down since, you will have the opportunity to re-engage and identify them as an eligible employee under the JobKeeper payment scheme. Key point, your staff are required to still be paid the minimum of $1,500 per fortnight before tax when receiving this benefit. Now, this sounds like we're repeating ourselves a bit, but because there are a few entitlements that are also due on this, it's worth noting that if your payment is greater than what your employee would typically receive, you will be given the option to apply superannuation to the difference between their regular pay and the top-up of $1,500 per fortnight. If this is less than what your employee would typically receive and you are still engaging them in an employment relationship, so they are still doing work for you and still producing revenue, you'll be required to pay superannuation on the total salary payment, regardless of the subsidy provided under JobKeeper. Your employees must be advised that they have been identified as eligible employees for JobKeeper, with payments commencing from 30 March 2020 to employees, and backdated payments available to employers from 1 May 2020 via the ATO. You'll be required to report information to the ATO on a monthly basis and will receive the ongoing payments in arrears. Now, it hasn't been clarified completely, but given the concessions and the lead-ins towards the single touch payroll, we are assuming at this stage that that will be the monitoring method that the ATO engages with to make sure that you are paying your employees this wage. Bear in mind, at the end of the day, the payment is assessable income in the hands of the employee, and as such, they will be unlikely to qualify for the job seeker allowance while receiving the JobKeeper payment. It also means we'll have to withhold PAYG on the payments, and at this stage, it is predicted to come through at about $46 per week on $1,500 per fortnight, depending on your specific circumstances and those circumstances of your employees. So let's run through some examples just to really solidify how the eligibility will work and so that we can apply it to some practical life situations. All of these examples have been provided by Treasury, so we'll work through them and frequently asked questions release that they've provided to us this morning. Adam owns a real estate business with 2 employees. The business is still operating at this stage, but Adam expects that turnover will decline by more than 30% in the coming months. The employees are Anne, who is a permanent full-time employee on a salary of $3,000 per fortnight before tax and who continues working for the business. And Nick, who is a permanent part-time employee on a salary of $1,000 per fortnight before tax and who continues working for the business. Adam is eligible to receive the JobKeeper payment for each employee, which would have the following benefits for the business and its employees. So the business continues to pay Anne her full salary of $3,000 per fortnight before tax, and the business will receive $1,500 per fortnight from the JobKeeper payment to subsidise the cost of Anne's salary, and will continue to pay the superannuation guarantee on Anne's income. So on the full $3,000, even though $1,500 of that payment per fortnight has been subsidised by JobKeeper. The business continues to pay Nick his $1,000 per fortnight before tax and an additional $500 per fortnight before tax, totaling $1,500 per fortnight before tax. So this means that we're remitting the full JobKeeper payment of $1,500 per fortnight, even though Nick typically would only receive $1,000 per fortnight. The business receives $1,500 per fortnight before tax from the JobKeeper payment, which will subsidise the cost of Nick's salary. The business must continue to pay superannuation guarantee on the $1,000 per fortnight as Nick is still engaged and is still earning that income. The business has the option of choosing to pay superannuation on the additional $500 before tax paid to Nick under the JobKeeper payment. Adam can register his initial interest in the scheme from 30 March 2020, followed subsequently by an application to the ATO with details about his eligible employees. In addition, Adam is required to advise his employees that he has nominated them as eligible employees to receive this payment. Adam will provide information to the ATO on a monthly basis and receive payment monthly in arrears. So hopefully that cleans that up a little for businesses that are still in operation and engaging staff. When we look at example 2, we take into consideration a business model that has been impacted by the mandatory shutdown. Zara runs a beauty salon in Melbourne. Originally, she employs 3 permanent part-time beauticians, but the government directive that beauty salons can no longer operate has required her to shut the business. As such, she's been forced to stand down 3 beauticians without pay. Zara's turnover will decline by more than 30%, so she's eligible to apply for the JobKeeper payment for each employee and pass on $1,500 per fortnight before tax to each of these 3 beauticians for up to 6 months. Zara will maintain the connection to her employees and be in a position to quickly resume operations. Zara is required to advise her employees that she's nominated them as eligible employees to receive the payment, and it's up to Zara whether she wants to pay superannuation on the additional income paid because of the JobKeeper payment. If Zara's employees have already received income support payments like Job Seeker payment when they receive the JobKeeper payment, they should advise Services Australia of the change in the circumstances online at my.gov.au or by telephone. So in this instance, Zara's business is not continuing to operate. She has stood down her staff, but she is eligible for the JobKeeper payment and her business becomes the intermediary to forward the payment onto her employees. Treasury has released a quite informative fact sheet answering a series of frequently asked questions regarding the JobKeeper payment. We'll run through a couple of typical examples that may shine some light for you as an employer, including what is the turnover for this and what happens when you do re-engage or disengage with your employees. We do strongly encourage that you have a quick look at the fact sheet itself because it does go into significant detail. So to cover off on turnover and the definition of turnover for JobKeeper, turnover is measured on the GST turnover test and basis. So this includes your GST supplies and your GST free supplies. It does not include input tax supplies. If you're confused about this turnover test, get in touch with your tax agent or with your BAS agent to clarify further. And once again, we're expecting a 30% reduction or more in turnover comparable to a period 12 months ago. What happens if your business has lumpy income? So if you cannot accurately align a 30% turnover to last financial year. You may work in a seasonal business, or you may have seen a peak over Christmas that will not be emulated again, but you still are experiencing impacts of the COVID-19 crisis. The tax commissioner will have discretion to set out alternative tests that could or would establish eligibility in specific circumstances. So it's still worth going through and submitting the application So going through into the ATO website and expressing your interest in receiving the payment, and then work through with your tax agent later on how you go about substantiating this payment in line with a reduction in turnover. If you don't think your turnover is going to decrease by 30% in this month, but you're almost certain it will decrease in coming months, are you still eligible for this payment? You can continue to apply for the payment after the initial application dates, and it's worth noting that the ATO will provide further guidance about self-assessment or actual anticipated falls in turnover as the information is legislated. Finally, back on turnover tests, if it's unlikely that your turnover will decrease by 30% in the coming month, you can get in and again commence a back payment system. So if you see a turnover reduction, for an example, in June, you can get in, apply as an eligible employer with that reduction in turnover test being displayed at that point in time and receive the payments from that point. That does mean, however, that your payments will not be backdated to 30 March 2020. They will commence from the point where you can substantiate a decrease of 30% or more in turnover. Now, regarding employees, so if you've stood down your employees without pay after 1 March 2020, can you back pay them to 30 March 2020 under the JobKeeper scheme? The answer is yes. If you want to claim the JobKeeper payment for your employees, you will need to confirm your eligible employee wants to be part of the scheme and arrange for them to be paid a minimum of $1,500 per fortnight before tax from 30 March 2020. If you've let employees go after 1 March, if you rehire them, they will also be eligible to receive this payment. So worth noting, if you have faced significant financial impacts in your business and you have stood down employees that were engaged as of 1 March, you can continue to rehire or reacquire that employee-employer relationship and start the flow of money via the JobKeeper payment. What happens if you do not have the cash to pay your eligible employees from the 30th of March 2020 or the commencement of this period? Because bearing in mind this payment will not be remitted by the ATO until 1 May 2020. So there is a very tight month there where employers may not have the cash funds. In this case, the ATO and Treasury have advised that banks have said that businesses may be able to use the upcoming JobKeeper payment as a basis to seek credit in order to pay their employees until the scheme is available to make its first payments. So once again, if you are experiencing cash flow difficulties, it is very important that you get in touch with your bank first and then go through the process of applying for the ATO payments. When we get into employer relationships, or if your employee resigns, there are some conditions if you've gone through the process of acknowledging them as an eligible employee for JobKeeper, in that if your employee resigns, you will need to contact the ATO with the possibility that some of the money paid to you will need to be refunded. And if you've hired an employee after 1 March, can you still receive the JobKeeper payment for them? The answer is unfortunately no. The employee must be engaged at that hard line of 1 March 2020. Finally, we'll cover off as to what happens if you have some employees that are eligible and others that aren't for the scheme. So just to recap, an eligible employee has a number of tests, including being an Australian citizen. And this can be problematic when you engage staff who may not be a permanent resident or Australian citizen or hold one of the disclosed visas, or they may be under the age of 16. The government is providing a range of support to businesses to address this specific economic consequence of the coronavirus, and the government is boosting cash flow for employers by providing $100,000 to eligible small and medium businesses and non-for-profits that employ people with a minimum payment of $20,000. So this refers to the government's response in the Cashflow Boost that we will continue to cover in the rest of this talk, but it's worth noting, even if you can't get the JobKeeper scheme for those eligible employees, there are other stimulus packages in place, not only from the federal government, but state and territory governments that may be able to support you continuing to employ these people. Sometimes it's not as easy as just matching the eligibility criteria. Your business may operate out of a partnership or a trust, or you may be a director and receiving director's fees or a paid shareholder. When it comes to the JobKeeper payment, there are different rules for different business structures. If you're self-employed or in regards to your employees within a proprietary limited, the turnover tests are almost identical. However, if your business is a partnership, only one partner can receive the JobKeeper payment. And this condition applies for trusts and for paid shareholders. So only one partner within a partnership is eligible for the payment. Only one beneficiary in a trust that typically receives distributions rather than salary or wages is eligible for the payment. And finally, only one paid shareholder is eligible to receive the JobKeeper payment in that scenario. It's worth noting for our working directors, an eligible business can nominate only one director to receive this payment. So if you work in a dual directorship or you have a director as a partner within the business, only one of you will be able to receive that JobKeeper payment under the current scheme. For employers who have elected to receive the 50% wage subsidy for eligible apprentices and trainees under the Supporting Apprentices and Trainees measure, you will only be able to receive that 50% subsidy from 1 January to 31 March 2020 if you elect to receive the JobKeeper payment for eligible employees. This JobKeeper payment for you will kick in from 1 April 2020, but there will be no crossover between the two payment methods. So 50% wage subsidy for the period of 1 January to 31 March, and then JobSeeker commencing 1 April 2020 onwards. For further information, get in touch with treasury.gov.au and have a look at their coronavirus and business support publications. Now back into much better understood territory, we are working with the Cashflow Boost that was announced in the second stimulus package. The Cashflow Boosts have been covered in our Money Honey Media podcast and in Facebook Live webinars with Joe, but we'll run through some practical examples today released by Treasury just to make sure everybody is certain of what is happening with the Cashflow Boost tied to your business activity statements. So you can receive up to $100,000 over the next 6 months to help you retain staff. This is for small to medium entities who have an aggregated turnover less than 50 million, who employ workers, and also applies to non-for-profits with a turnover of less than 3 million. Worth noting that because this is tied to your PAYGW, it will be indirectly linked to your BAS reporting for the period, whether that is quarterly or monthly. Continuing on, eligible businesses that pay salary and wages but do not withhold tax will also get a minimum payment coming through. So this is really important to note that you have registered to report PAYGW, else you will not be able to claim this cash flow boost. Now, this credit will not be applied to other outstanding debt with the ATO. So it will go through to reduce PAYGW reporting, so the tax withheld on your employees' wages, but will not be applied to outstanding debts with the ATO. It is there to encourage you to be able to retain staff and retain those employment relationships, similar to the JobKeeper payment. Now, as some practical examples, we're going to look at two businesses, one that exceeds the maximum payment per cash flow boost, and one that does not reach the minimum payment for the cash flow boost in PAYGW reporting. So Sarah and Tim are the two examples that we're going to use, and it's worth noting that the cash flow boost itself is split across two different reporting periods. So your first cash flow boost will come through at a minimum of $10,000 and a maximum of $50,000, and remaining reporting periods will split this out as you go through. So let's run with Sarah. Sarah owns and runs a building business in South Australia and employs 8 construction workers on an average full-time weekly earnings of $89,730 per year. In the months of March, April, May and June for the 1920 income year, Sarah reports withholding of $15,008 for an employee on each monthly activity statement. So when it comes to lodging Sarah's March monthly BAS, Sarah will receive 3 times her reported withholding for March. So that will be 3 times $15,008. As the amount is greater than $10,000, Sarah will receive a cash flow boost of $45,024 upon lodgement of her March BAS. For April, Sarah's withholding is again $15,008. Now, because Sarah has already received a cash flow boost of $45,024, she only has a remaining initial cash flow boost of $4,976. So upon lodgement of her April BAS, even though she withheld $15,008, Sarah will only receive $4,976 as a cash flow boost in that reporting period. Sarah will not receive any further initial cash flow boosts after she has reached the $50,000 limit. Now, practically what this means is if you exceed reporting up until June, so you exceed that initial cash flow payment of $50,000, you will be capped at the maximum payment of $50,000 once you've reached that limit. If we look at someone who hasn't reached $50,000 and instead is below the minimum payment of $10,000, we come back down to Tim's situation. So Tim owns and runs a small paper delivery business in Melbourne and employs 2 casual employees who each earn $10,000 per year. In the March 2020 quarterly activity statement, Tim reports withholding of 0 for his employees as they are under the tax-free threshold. Upon lodgement of the March 2020 quarter, Tim is reporting $0 PAYG withheld, but he is receiving a minimum payment of $10,000 as an initial cash flow boost. Tim will not receive any further initial cash flow boosts unless he increases his withholding for the June 2020 quarter and that it is greater than $10,000 already received. So if you're over the limit at $50,000 like Sarah is, you cannot receive any further payments until we get into later reporting periods in the year. If you are under the limit and you do not report any further withholding above $10,000, you will receive that $10,000 minimum repayment up until June 2020. Moving forward, we have the secondary cash flow boost coming through. So back to Sarah's situation. When she received the maximum initial $50,000 cash flow boost and she lodges her June to September business activity statements, she'll receive 1/4 of $50,000 for each statement. So for June 2020, she'll receive $12,500. For July 2020, another $12,500. August 2020, $12,500. And finally in September 2020, $12,500. Meaning that Sarah, between the months of March to September, has received a full payment of $100,000 as a tax-free cash flow boost. Back to Tim. Tim's initial cash flow boost was $10,000. He's entitled to a further $10,000 when he lodges his June and September quarterly BASs. Now, because these will be tiered across those BASs, he receives $5,000 for the quarter ended June 2020 and $5,000 for the quarter ended September 2020, bringing Tim's total cash flow boost received across the 2 cash flow boosts to $20,000. Now, a business does not need to do anything further to apply for cash flow boosts. We just need to ensure that you are correctly registered. So if you have some concerns about PAYG withholding and whether this applies to you, get in touch with your tax agent as soon as possible. This legislation is already underway and is in law. So this payment will start coming through on the 28th of April. So that lodgement date for our quarterly BASs. We have included examples here in our working notes, so we will provide links to these seminar notes and our PowerPoint presentation at a later date. Outside of the cash flow boost, we still have wage subsidies in place for those employers who engage apprentices and trainees during this period. So eligible employers can apply for a wage subsidy of up to 50% of the apprentices or trainees' wages paid during the 9 months from 1 January 2020 to 30 September 2020. Now note, this reimbursement is capped at a maximum of $21,000 per eligible apprentice or trainee, or $7,000 per quarter. And in order to be eligible initially, small businesses must employ fewer than 20 full-time employees, and they must have employed these apprentices as at 1 March 2020. So we see that hard date coming back in again. If you happen to acquire or re-engage out of trade apprentice, so someone that's been let go by another entity, regardless of your business size, you will be eligible to apply for this subsidy, subject to capping for the JobKeeper payment. Employers can register for the subsidy from early April 2020, with final claims and payments to be made by the 31st of December 2020. Note that an eligibility assessment will be undertaken, and this is done through the Australian Apprenticeship Support Network providers. So get in touch with your state and territory government or your registered apprenticeship provider for more information. While we progress through the business cycle where we still continue to see an economic turn down or our business revenue is suffering, it is very important to ensure that you're managing your existing employee leave balances during this period. Whilst your business is still retaining and employing staff, annual leave, personal leave and long service leave will continue to accrue. So where possible during this period, encourage staff to start utilising leave prior to accruing excessive entitlements. Now, really worth noting, as of 1 April 2020, the Fair Work Commission came through with a release of a change of up to 103 awards under the current awards framework, allowing for 2 weeks of unpaid pandemic leave and the ability to take annual leave at half pay. Ensure you stay up to date with changes via Fair Work because they will be industry specific. Consider the options afforded under flexible or part-time working arrangements, basically encouraging staff to utilise leave entitlements during this period. And it's really important to note that leave entitlements are monitored, as certain entitlements will be payable to employees in the event of a termination or redundancy. So your annual leave, including leave loading for those of us who work in the hospitality industry, will be payable upon termination, and this could put further strain on your business during an economic crisis. All right, so we have progressed through to businesses that are suffering serious financial strain. And outside of the subsidies available, let's see what else we have in the bag for those businesses who are currently going through some harder times. So whether you're in the entertainment industry or you have been entirely disrupted by the cease work, this is where we're at. The ATO has released a number of concessions at this point, including allowing you to apply for remission of interest and penalties on debts owed to the ATO. It's worth noting that you as an employer do not have the ability to exceed your superannuation guarantee obligations. As this is written into law, the ATO cannot vary the contribution due date, and payments are due 28 days after the end of each respective quarter. So do not be late with your superannuation payments. The ATO is also offering low interest payment plans and payment deferrals for those who are experiencing financial hardship. So if you are having issues with debts owed to the ATO, it is worth getting in touch with your tax agent or the ATO directly to explain your situation, and they will consider it like the human beings that they are. A couple of further details from the ATO. If you currently report on a quarterly cycle, you have the option to change your GST reporting period. So if you are currently sitting in a refund basis because you have expended more than you've brought in, consider maybe moving to monthly reporting, meaning that you'll have faster access to those GST credits that you're entitled to. Just be aware that conditions apply when we're changing GST reporting periods, and probably get in touch with your BAS or tax agent for further information. Another really big one, and this is something that we saw coming through in the bushfire response as well, if you have pay-as-you-go installments, so this is prepaid installments of your business's tax bill, you can vary your PAYG installments on your activity statement to nil. You may be able to claim a refund for any installments made during the 1920 financial year, and penalties will not be applied to varied installments for the 1920 financial year. So really worth noting, if you are on a PAYGI installment cycle, make sure that you're reporting correctly. We can and will have the ability to delay these upfront payments of tax moving forward. At this point, the Super Guarantee Amnesty is also running. So this was released on the 6th of March 2020. The amnesty allows employers to disclose and pay previously unpaid super guarantee charge, including nominal interest that they owe their employees. The qualifying quarters for the amnesty start from 1 July 1992 to 31 March 2018. SGC, so that's your super guarantee, declared in the Amnesty will not incur the admin component, so that's $20 per employee per quarter, nor the Part 7 penalty, and this is your director's penalty notice. Employers must come forward and apply by the 7th of September 2020 to qualify for this amnesty. So if you are aware that you have outstanding superannuation guarantee contributions owed to employees, now is the time to come forward and declare to save yourself some significant employee administrative components and director's penalty notices. We're just going to go into this in more detail because it is a massive move from the ATO. By participating in the amnesty, you will also be able to claim a tax deduction for the SGC amounts you pay to the ATO by the 7th of September 2020. Typically, when we pay superannuation late, you do not receive that payment as a tax deduction against the revenue of the business. So this is a massive win if you do have outstanding payments owed. This payment will also, so the superannuation payment will also not be subject to penalties and admin fees. If you fail to disclose unpaid superannuation during the amnesty, a minimum penalty of 100% of the SGC due will be levied. So this means if you had $10,000 of super guarantee owed to employees, at a minimum, the penalty will be $10,000 applicable to you directly, potentially as the director of the business. Extended repayments and repayment plans are available to businesses during the amnesty as part of the COVID-19 response, and historical information provided by a current or former employee may result in an audit of any quarter from 1 July 1992. The ATO is not restricted by a time limit to make an SGC assessment. So again, now is an important time if you fear that you may have missed super guarantee payments or it may not have been quite right. Get in touch with your tax agent. Have a look at the ATO's information available about the amnesty on their website, so www.ato.gov.au, and we will get in and assist you with lodging and getting up to date. So we've moved past the business cycle of facing revenue impacts and being under serious financial strain, and we are now at the point where we are looking at standing down employees or terminating employees. As an employer, you have to be aware of what's available via Fair Work and under the award, and where possible, before standing down an employee or terminating an employee as a result of the economic turndown, consider a few other options that are available. Arrange flexible working, bearing in mind that wages will be subsidised by the JobKeeper payments with revenue income from 1 May 2020, and the banks have openly said that they are willing to view the JobKeeper payment as a credit towards future liabilities held with the bank. Encourage staff to use paid leave prior to considering standing them down or terminating them, and make sure that you apply for JobKeeper if your revenue has been significantly impacted. Ensure that you are very aware of the changes under your applicable award as they come into legislation, and these changes may entitle your employees to unpaid leave or further leave provisions that you're not typically familiar with. If you have closed down due to an enforceable government direction, a large portion of the workforce is self-quarantined, preventing useful employment, or there is a stoppage of work due to a lack of supply for which the employer cannot be held responsible, you may be legally allowed to stand down employees without pay. This is specific to award, so be very cautious before standing down employees without pay. And if you have further questions, get in touch with a number of representatives, either your tax agent to assist interpreting awards or a HR specific service. In the event of a business closure, employee termination may be required. And again, this exposes the business to the requirement to calculate appropriate payments of unused entitlements and provide appropriate disclosure to employees. So for our short-term held employees, this will be your annual leave payments plus leave loading. For our long-term employees, this could include long service leave. So just bear in mind before you get to the point of terminating employees, just really consider the impacts to your further cash flow. Now, Fair Work has a number of helpful articles on this, including a dedicated COVID-19 response page, and we've extracted some information from there. But just to really recap, where possible, encourage employees to utilise entitlements ahead of time, so annual leave, long service leave. And with changes to award, there is the ability to take this annual leave at half pay for twice the time. It's important to note, again, that employees may be able to access extended leave options, including unpaid pandemic leave, under award changes. In the event that you have stood down an employee who was on your payroll, or you've stood down employees who were on your payroll at 1 March, you will be eligible to rehire them and identify them as eligible employees under the JobKeeper payment program. So it's about re-engaging employees and maintaining that relationship so that we can bounce back after this is all said and done. Standing down employees requires a significant and substantial basis of proof, with government subsidies actively working to maintain the link between employees and employers, meaning that the government is actively discouraging standing down your employees where possible, and the JobKeeper payment has been released to prevent this. In the event of a termination, an employer will be required to remit the full value of owed employee entitlements. So again, get in touch with your tax agent, make sure that these are being recorded correctly, and make sure that we can afford to do this before you shut down your business. Contact Fair Work or your tax agent should you require further clarification on awards specific to your industry. Our state and territory governments have released a number of stimulus measures in addition to the federal government stimulus packages available. New South Wales in particular has quite a robust response to the payroll tax issue that many businesses have faced, and there are a number of opportunities available from state and territory governments that haven't been covered in the federal government stimulus package. So we will recap on each state as relevant. We've left Tasmania off at the moment, but more information can be found on state and territory government websites directly, as well as Services Australia and treasury.gov.au. So if we get into New South Wales directly, what we're seeing now is substantial payroll tax deferrals and concessions. If you are a business with an employee payroll higher than $10 million, you will receive an automatic 6-month deferral from paying payroll tax for the duration of the shutdown. And if you are an entity with payroll less than $10 million, you automatically receive a 3-month waiver with a further 3 months deferral for payroll tax. Now, what this means in practicality is that 3-month waiver concludes with you not having to pay payroll tax up front for March, April, and May. When you lodge your 2019 payroll tax reconciliation, you'll receive a 25% reduction on the total cost of your payroll. So it's just taking out that prepaid element for payroll tax, but we will likely see additions to the stimulus package as we move through. New South Wales specifically, we have a waiving of state and government fees for small business, including for cafes, tradies, and restaurants. And this can be anything from liquor licenses to government processing fees. On top of that, we have long service leave rules being relaxed and reduced to allow employees to access long service leave faster without a notice period, and allowing employees to take leave in shorter blocks. We also have the much touted employer small business fund, which sees grants of up to $10,000 to eligible small business entities. To run through the eligibility criteria, you must employ 1 to 19 employees and have a turnover that's greater than $75,000. Your payroll tax must be below the payroll threshold for New South Wales. So this means that you would not be paying payroll tax in New South Wales. You must have an ABN and be based in New South Wales as at 1 March 2020, and you must be able to justify that you've been highly impacted by the public health COVID-19 restrictions on gathering and movement order 2020 issued on the 30th of March 2020. This means that if you are in a salon or a pub that has been ordered to shut down, you will very likely be eligible for this payment. However, noting that this payment is for expenses that are unavoidable. So we're talking utilities, overheads, legal costs, and financial advice. It's not for general wage subsidies. So bear that in mind. You will also have to provide appropriate documentation upon application, and this can be done via the Services New South Wales website, which will remain open until 1 June 2020 for payment applications for this grant. With the ACT, we have released a Homefront package for artists valued up to $10,000 per artist, which is designed to support the arts development and the sustainability of art practices over the next 6 to 9 months. In total, there is $500,000 to contribute towards up to $10,000 grants per artist, but applications close quite soon. being the 17th of April 2020. So if you do know an artist, or you have an artist, or you happen to be an artist yourself, get in touch with Access Canberra and the ACT government specifically to apply for the Homefront package. Jobs for Canberra Fund is an additional release which will allow the ACT Government Directorate to continue to employ people for cleaning, repairs and maintenance projects. This fund is really designed to focus on providing secure work opportunities for Canberrans who have relied on casual work and are not eligible for the Commonwealth's wage subsidy scheme. Finally, the ACT is also offering interest-free deferrals of payroll tax from 1 July 2020 for all businesses, up to the ACT's payroll threshold of $10 million. Businesses will need to complete a simple online application form to confirm their eligibility, and applications will be done via the ATO. In Queensland's stimulus package, yet again, we see a payroll tax deferral coming through, but it is for all Queensland businesses until 31 July 2020. So you will not need to remit payroll tax until the 31st of July 2020. COVID-19 job support loans are also available with up to $250,000 in payments with 12 months interest free for Queensland businesses that qualify. So call QRIDA on 1-800-623-946 or contact them via email. Businesses specifically impacted by COVID-19 in Queensland will receive a refund of 2 months' worth of payroll tax. Additionally, small and medium businesses will receive a 3-month payroll tax holiday and a further 6-month payroll tax deferral. This is in addition to the payroll tax deferrals already announced for Queensland, and Queensland businesses can apply for payroll tax relief via www.business.qld.gov.au. It's also worth noting that QLD is releasing $500 million, or dedicating $500 million rather, to assist workers who lose their job or income and to help them find jobs in industries that are vital to getting the Queensland state through this crisis. So that includes healthcare, agriculture, food production, transport, cleaning and mining. Finally, sole traders and small and medium businesses will get a $500 rebate on their power bill. Any business consuming less than 100 kilowatt hours will receive the rebate, which will be automatically applied on their business electricity bills. Moving over to Victoria's stimulus package, full payroll tax refunds for the 2019-2020 financial year will be available to small to medium-sized businesses with a payroll of less than $3 million, and small to medium-sized businesses with payroll less than $3 million can also elect to defer any payroll tax for the first 3 months of the 2021 financial year until 1 January 2021. There is a dedicated Working for Victoria fund with $500 million dedicated to help support workers who have lost their jobs and get them into finding new opportunities, and the government will pay all of their outstanding supplier invoices within 5 business days, accelerating the revenue through to our small suppliers who work with government in Victoria. Rent relief for commercial tenants is also in the mix for those who rent government buildings, and there is a funding of $10,000 per business available and to be allocated through a grants process. Now, what we have seen with this one is the eligibility requirements mimic New South Wales, with the only change centering on the Victorian payroll tax threshold, which is $650,000 not being exceeded. So worth getting in touch with your state and government websites to find out more if you feel you are eligible for these grants. Finally, with South Australia, we see an expanded economic and business growth fund established. This will fund local industry with grants from $50,000 to $2 million, with the projects to be located within South Australia that offer outcomes and benefits for regional South Australia. Worth noting, applications close 11 May 2020 for this grant package. In addition to this, they are releasing a business support package, which is a one tax-free cash payment of up to $100,000 for small and medium businesses to keep staff employed. In addition to this, we have $300 million set aside for the Business and Job Support Fund, which will directly assist individual businesses and industry sectors facing potential collapse and the loss of thousands of jobs due to the ongoing impacts of the coronavirus and necessary new restrictions to limit its spread. Finally, we have 6 months of waivers for payroll tax for all businesses with an annual payroll grouped up to $4 million. Eligible businesses won't have to pay any payroll tax from April to September. Regarding banks and lending, outside of these stimulus packages, the government has paired with the banks and invested quite a bit of money to allow them to run through and do a 6-month loan repayment holiday. Now, this is for small business and home loan customers, so worth getting in touch with your bank if you currently have a loan with them, noting that the 6-month repayment holiday does not prevent the accrual of interest on outstanding balances. In addition to this, the government will also guarantee unsecured loans to small business of up to $250,000 in a partnership with the bank. These loans will be up to 3 years with no repayments for the first 6 months, and the loans will commence in April 2020. So if you need some immediate cash funds now, get in touch with your bank. Try and get this all shored up just so that you're ready for the rest of the crisis. Where are we in the business cycle now? We are sitting at the most unfortunate circumstances, which would be businesses applying for insolvency. It's worth noting that as part of the stimulus response, the government has relaxed a number of laws about trading while insolvent and changed creditors' ability to seek insolvency action on business by increasing the threshold from $2,000 to $20,000 before a creditor can seek insolvency action against a business. And you are also allowed an extended 6 months to respond to the claim. So in totality, it appears that the government will not be seeking insolvency claims during this period. So really worth noting that you have a little bit of leeway if you're a bit short on cash. Finally, the ATO will go easy. So if you have PAYG installments for September or December, you can ask for these to be varied to nil without penalties. When you vary your March installment to nil, you can also vary these previous payments. What this may result in is a refund of prepaid tax installments for your business. Let us know, and by us, I mean your registered tax agent. Get in touch with them if you need assistance with this, or your registered BAS agent to help further. It's also really worth noting that the ATO is more than happy to make a payment arrangement on anything that you need. So we have seen extended and courteous responses from the ATO on all payment arrangements up to date as some anecdotal evidence, but they are broadcasting a general relaxed attitude towards payments. If you are in small business, now is the time to assess the possible impacts that the coronavirus may have on your business. Will your staff still be able to work? Have you got the procedures in place to work from home? And what do we do in the event of a continued lockdown? Will your customers be able to access your services? And are you doing enough to ensure your customers can pay for the services that you're delivering? Always consider discretionary spending in this, and get in touch with a tax agent if you need cash flow assistance or some further budgeting assistance. It is a struggle to say how long this lockdown will go for. But all we can do as business owners and business advisors at this point is plan and try and pace ourselves through it with the stimulus that's available. So no one knows what's going to happen with the virus at the moment and how much longer it will continue to impact business and the economy. But it's always worth noting that your mental health is paramount at this point. It's important that you get in touch with healthcare professionals if required, and you're not alone. Touch base with your other mutual business owners. There is a massive community out there just ready and waiting to support you. And where possible, seek help online. There are plenty of resources available. Get in touch with a registered professional. In general, as a tax and advisory business, Jigsaw Tax is here to help. So you can catch us on Money Honey Media on iTunes, Spotify, or Buzzsprout. You can get in touch with Joe McCauley directly via Tradie Wags, or you can contact Jigsaw via our reception at jigsawtax.com.au, or you can follow us on social media. It has been a pleasure talking to you. If you have any further questions, we have made a form available that will allow you to request advice specific to your circumstances. So have a click on that. Let us know how you go. Get in touch. Thanks.